Life Healthcare's balance sheet is in good health. The private hospital operator has posted a 30% rise in headline earnings from continuing operations at the halfway stage. This was helped by a 7.8% uptick in revenue from continuing operations, and that was driven by robust activity growth in Southern Africa. An interim dividend of 19 cents per share has been declared. That's up 11.8% from a year earlier. And Group CEO for Life Healthcare, Peter Wharton-Hood, joins us now to unpack that performance. Peter, an absolute pleasure and a good afternoon to you.
Good afternoon, Alatanda. Thank you very much for having me.
Wonderful, Peter. It looks like it's been quite a resilient period. I'm keen to get your overall thoughts on how Life Care has fared.
It was a tough 6 months. We understood the headwinds that we were moving into. And the strategy that we've put in place has started to literally pay dividends. I think that we have a simplified balance sheet. We have a business that's easier to understand. And after disposing of a very attractive asset in the form of Alliance Medical Group, we now are Southern African focused with an international exposure in the Alzheimer's modality. And we also understand that our balance sheet is like a fortress. It's the lowest gearing that we've had in the history of the company. So it's a moment in time now where the strategy of delivering affordable, accessible healthcare is playing out. A pleasing uptick in volumes in a difficult market has led to us really reinforcing the strategy that our network deals with healthcare funders has been the right way for us to go.
I want to speak a little bit more about that Southern Africa focused business and some of the green shoots that you are seeing specifically there, Peter. Help us understand a little bit about how we have seen a growth in there, and also maybe what nodes are offering the most growth.
Well, in a market where we know that we don't see increases in the number of insured lives, we effectively have to take market share away from our competitors. We decided to do that through making arrangements with the medical schemes, where effectively we would take more volume into our hospital complexes, but we would do it at lower prices. That sounds a lot like a retail analogy, which you're all familiar with. And in that particular context, we've seen the volume growth, particularly in Q2. And whilst it has a slightly negative impact on overall margins, it's the right direction of travel for us to have in acute care. We're also entering the phase now where the traction in our non-acute business growth is also starting to take shape. We spoke at length starting nearly 4 years ago about our ambition statements in imaging. We've spoken about what we wanted to do in renal care. We're well on track in the radio pharmacy, care delivery pathways with the building of our cyclotrons and the build out of new businesses. So whilst the acute hospitals dominates the income statement, one can see that the initiatives there are showing volume growth, but the 4 years of investment, hard work, and sort of gaining expertise in the off-hospital complex businesses, I think is starting to take shape. And there's a long way to run on those. And we haven't even started to talk about what we're doing in America.
Let's talk about what you're doing in America.
Well, we said some years ago that opportunistically we ended up investing or having an investment in Life Molecular Imaging. Its key asset was Neuraseq, or is Neuraseq, and that is one of only 3 radioisotopes that can be used to diagnose an Alzheimer's condition in a patient using sophisticated PET-CT diagnostics. During the clinical trials, we held about 85% of the world's market share. That clearly is not sustainable. So we realized we had a more realistic ambition that perhaps we could get to a third. We set in place a platform in the United States where we were open for business, set up the manufacturing arrangements to be able to manufacture our isotope across the United States in selected markets. And we've started to see the momentum shift in our favor. Treatment drugs have been approved for Alzheimer's. The medical aids are prepared to pay for treatments. They're prepared to pay for diagnostics. And the demand for our diagnostic is starting to increase. It's still baby steps. The commercial sales are about 110% up on where they were this time last year. And depending on which one of the forecasts we choose to articulate, we think that by the end of September, we could get to about 3,000 commercial doses of Neuraseq each month, which is a significant uptick from where we were a year ago. Still baby steps compared to where we think we can get. But it may go slower, it may go faster. We can't control that particular rollout in the United States, but it's an exciting time for the South African-based healthcare group.
Absolutely agree with you there, Peter. I also want to speak about the milestone of the lowest gearing in the history of life healthcare and what this essentially means to have a balance sheet, that is quite strong at this point. When we think of expansion, when we think of capital, allocating capital, what does that look like at this moment?
Well, one mustn't be caught in the trap that we've got lots of money to spend, so just spend it. The discipline that made this company great prevails. That does mean that our capital allocation, we will still treat capital as a scarce resource. We will only look at projects that are long-term viable. But it does mean that the opportunities, as and when they present themselves, be it in the brownfield expansion of our existing hospital complexes, where we've explained we want to invest in ICU capacity across selected hospitals in South Africa, or it may come by way of corporate finance activity. More recently, you saw we bought Fresenius and the large renal dialysis business that it owned. So it's a mixture of both. It does say that we have flexibility. It also means that our ambitions may accelerate faster than perhaps would have been the case in the past. But there's always an underlying sense of prudence in the way this company is run, and money will be spent wisely, but it will be spent in line with where the strategy has been preordained, that it is, we're an acute hospital business in Southern Africa with ambitions in non-acute healthcare related activities off the hospital complexes. And we feel we're very well positioned to be able to take advantage as and when.
Peter, earlier I was reading an analysis by a fund manager about private healthcare in South Africa, and something they mentioned is that, in South Africa, private healthcare is ex-growth. I want to get your thoughts on that. Is it a time to be looking at diversification, similar to what you're doing in the US? You have said that you're focused on Southern Africa. That's not necessarily just South Africa.
Well, and when one talks about ex-growth, one must concede that the number of privately insured medical aid members is static. But when one talks about a hospital complex or hospital complexes in private healthcare, we're not full. Yes, we are currently running at 74% occupancy as of yesterday, and the occupancies for the year are likely to be around 70%. I still think there's significant opportunity to be able to use the capacity and capabilities that sit in private healthcare in South Africa for other uses. And by that, what I'm saying is cooperation with government should allow us to be able to use our capacity on commercial terms to service some public sector patients. Mm-hmm. And it's not just for life healthcare, that opportunity exists wherever there's spare capacity. So when one talks about ex-growth, I conceded on one side, despite the fact that we grew paid patient days by 2.8% through the innovative deals that we did with the funders. But South Africa, demand for healthcare exceeds available supply, and we're sitting on unutilized capacity. There must be some magic in that statement that we can do something differently.
Speaking about cooperation with government, NHI was signed into, and I'm keen to get your thoughts that you and I have had this conversation. You've never been opposed, NHI or universal healthcare, but of course there were some very specific terms of this bill that you were concerned about, haven't seemed to be addressed. Peter, what is Life Healthcare's position on it at present?
Position is unchanged. As you correctly stated, we supported the enviable outcomes as a healthcare provider, as a South African citizen, as a human. It's an ambition statement that you have to support. However, the way the government is going about it, it doesn't find favor with us. They didn't listen to us during the parliamentary submissions. We voiced our objections in a constructive way to say that the path to providing universal healthcare access for all is not just through legislation. It's a building blocks approach where you deal with the basics that are required to get the healthcare delivery right. And we go back to the statements which you've heard Life Healthcare say many times before. We need more doctors, we need more nurses, we need more skilled hospital managers that are installed inside the country's existing infrastructure to manage the infrastructure that we already have access to as a country. So that has largely been ignored, and it has been ignored, and we still think there's time to redress that. When it comes to creating one large single fund with the operational risk that goes with it, and a single point of failure in the disbursements required to keep the healthcare system afloat, we just don't think that that's the right way to do things. So it's early days. Perhaps the opportunity to re-engage is there. Life Healthcare wants to be constructive. We want to collaborate, and we want to play a constructive role in making this happen in due course, but on sound and sustainable principles.
And with that said, Peter, let's talk about the outlook for Life Healthcare and what you are looking forward to in the next 6 months.
We feel that we can still see paid patient days grow. It's probably a number closer to 2%. We think that occupancy levels will be around about or just above 70% for the full year through to the end of September of 2024. We have got clear plans from an expansion perspective and capital commitments, which we articulated in detail in our presentation for the growth in our domestic business. And spreading our eyes further afield, the concentration in Life Molecular is for the executives to concentrate on the delivery of commercial doses of Neuraceq and to keep that trend, the upward trend, firmly in place with strong momentum. So we feel that tough times are around us, but we look forward to it with a sense of optimism and determination and a smile on our faces.
Peter, always a pleasure speaking to you. Thank you so much for taking us through the set of numbers today. And that was Peter Wharton-Hood, a Group CEO for Life Healthcare.